Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, March 22nd, and just going to do a fast fire through all the names that we're involved in and really just give you my recommendation. So starting with the S&P 1370, that's your big downside target. You'd be looking for a pretty big bounce there. Right now we're bouncing off, generally speaking, these lows that we saw back 2 weeks ago or last week, whichever one it was. You also have value area high for the month A of March. So you want to look for these levels to hold. If not, we should have no problem pushing down another 15 or 20 points to the downside. Alright, Apple, I don't think there's really anything to say here. I think this is a name overall you just want to stay involved in. If you haven't already, trimmed your longs, go ahead and do that. I did mention the other day that I added to my position, but that's just because I had barely any, my position was so small. But basically, this is a hold, and if it continues to ride higher, then so be it. But you'd be looking to add on any significant pullback. I'd be looking at least down towards 550 before you start looking to be a buyer again. Other than that, let this thing work out, let it consolidate, because it looks like that's what it wants to do. Amazon, staying in there, and if I zoom in, you can see, we've just been kind of consolidating in a $4 range or so. You want to see this thing break out to the upside. We're still long from these 184, 185 levels. If we can't hold, say, 190, then I'm going to be looking to take profits, because it may just be that type of market where we're starting to form a top and, we could potentially roll over. But I do think that there's going to be buyers lurking at 1370. So Amazon should continue to do okay. Baidu continues, it's the best performer in my portfolio today. Really had a nice bounce off the 139 level. It really gave you an opportunity to get involved in this name at cheap levels. If you didn't catch that, it was gone, and it was gone pretty quick. It finished off the highs of the day. It was almost up, it was up over 3.5%, I want to say, at one point today. But yeah, I'm long. If you want to know my exposure, long the 145 April calls. Just so far, those are naked. Those about a 30% gain or so from buying yesterday around 140 or 141 or something like that. And then I'm long the 140 by 145 call spread expiring next week. I can make up to $2.50 or so on that by next Friday. Already have a decent amount of profit in that, but looking for the time decay on that 145 to kick in this weekend if we don't start to go above 145. That should help this position and allow me to take it off the beginning of next week. Alright, American Express continues to do well, hang in there, but I'm looking at these current levels, and if we can't, I look at this and, I kind of see like a flat top here, rising lows. You look at this point of control for March. If we can't hold it, I'm going to be anxious to take some profits, and that's just kind of the way I'm viewing this market, and, take it how you want, but there's really no reason to let a stock that's gone 20% in your favor since we were buying and, let it come down $5 before you get to buy it, can buy it again or add on to it. Go ahead and take the profits. Sure, you want to be a buyer in the low 50s, but if we start breaking below, say, this 57 range and really start to flush down, there's no stopping this to going back to 53 to 52. So just be prudent and don't let these profits come back in your face. Chesapeake has gotten really beat up over the last few days. This is new, first time I've seen it. March's point of control. Would like to see these levels hold, but this is why you can take advantage of selling calls against your position. I sold the 26s back, one of these up days, somewhere when it was up around 25 or so, so right about the middle. And it protected some of my downside. I did it to the 27s a couple weeks before that, and I bought those back for cheaper. That's why I sold the 26s. But that's kind of why you do it. You want to protect your potential downside with the expectations that perhaps we're at the top end of the range. As long as we hold, this bottom end of the range, call it 23.50, worst case scenario, we should be okay. If not, we'll drop another $1.50, and I don't necessarily think you want to be a part of that. Devon Energy, this is a trade that looks like it's just not going to work out. I was long the 75 by 80 call spread, and that was after I rode this right up with some calls that ended up, I want to say they doubled, but I don't remember. And I took those proceeds and bought the 75 by 80 call spread. This position, it's only underwater by a little bit because of the 80. I'm short the 80 call. There's still some good time value against left in it. If we bounce here, I'll look to take the position off into strength around 72.5 or so, the point of control for March. If not, if we continue lower, then I'll take it off immediately, because if we break 70, we should travel back towards 65 or so. Freeport, gotta admit, I just took the loss and ran. All right, this is a classic example of your expectations basically not working out, and our expectations where we could buy the bottom end of this range started around 40 and finished our buying around 39, had a cost basis around 39.5, had a hard time staying above 39.5, ended up really point of control for March 39.33, ended up opened above that today but traded below it, couldn't stay above it, and ended up on the bottom end of the range. This is probably going to flush down a little bit more, especially if the market does the same. So yeah, I don't think it's necessarily right to be long right here. SanDisk, this is the name. It really, I'm going to bring up the daily chart so you can see it. We were buying, if you remember, I haven't featured it since this name was, since we were buying it at the beginning in the end of February, I'm sorry, the end of January, the beginning of February. I just kind of set it and forget it. This is, generally speaking, a slow mover, and it moved slow, and it kind of reached our target. We were looking for a little higher prices, but if you think this is it, then you'd look to take some profits. I would, you've already ridden it up, and this is kind of a cheap shot. Keep your stop perhaps below 48 and see if it can press up towards the mid-50s. If it can, you have a nice winner, because essentially we're in a trading box, and you have the 200-day kind of starting to creep up, sitting above the 50, which really doesn't matter. But you also have point of control 46.5, basically setting up for a high base and a potential ride higher. Alright, Ford got a point of control shift at, actually this was today I believe, 12.50. If we stay above, or I'm sorry, if we stay below there, you're going to look to sell Ford. If we stay above, then it's okay and we could press higher, but this appears that this could be, basically a lower high and a potential move to the downside. We are at the top of the value area for the last 52 weeks, and there's no reason why we can't trade back down towards the lower end, where I am still a believer that you should be a buyer. ConocoPhillips should have gotten stopped out of this on at least a partial portion of your position, and if you didn't, then perhaps you have your stop a little too loose, but at the same time it's close. And I basically took the profits right at the beginning of the day. After the market opened up weaker, I was just looking to trim. After just the other day, I was looking maybe to adding to this, but didn't really get that signal. And with oil, kind of pushing down, it's at the value area high for the year, 109 or so, and we've closed above that level one time so far in about 20 trading days. Well, it looks like this value area wasn't there. But anyways, you do have a high volume area from 109 to 105. That's pretty much where we've been trading and where the sessions have closed. If we can't hold those levels, we could push back down towards 100, and that would be, in my opinion, a good thing for the market. Could be, I do think these rising oil prices are killing this potential market rally. Las Vegas Sands, you have some decent selling volume coming in. It was actually an update today, but you can see since that huge move higher we had on the 19th, we've had 3 down days in a row, pretty much at the lower end of this range. If we start to break below, say, 57, definitely look to take some off. When similar situation, you have a little bit of a ceiling here, and if you're a little nervous that the market can decline and you'd rather hold cash, then look to take off names that this is at the top end of the range. It could easily come back down $5-10, and you could pick it up for cheap at lower prices. So really overall, I think this market, we could be at a point where we bounce, but your ultimate buying level should be around 1370. If that's the case, you want to have your cash ready and your shopping list ready to go, because there will be an opportunity at least for a bounce. One other, I do want to cover gold and silver really quick. Gold kind of stabilizing, made push below these recent lows and kind of was rejected. So if we hold about 1635 or so, gold should be good and really should make a run back up towards 1700. If not, then there could be a little more downside. Silver, I'll show it to you on these charts because you get a little better idea. We are at the value area low for the last 90 days. I'm more interested in this high volume area right down, let's see, around 3067 or so. You have pretty good volume. It was the breakout level back in January for silver. We're pretty much there, so if you want to take a short, cheap shot, this isn't a bad idea. Doing like a call spread, looking on SLV. Let's see, you could do like the 30s by 32s or 31s by 32s, something like that. Just trying to pick up a cheap winner. And gold, I still own my call spread on gold, which is 161 by 164. I was going to buy more than what I originally did, but I just said, you know what, I'll just wait. I can always buy a different spread. And ended up waiting, so the loss that I'm incurring is fairly small, and it can still work out in my favor. Would like to see it get above this, really the point of control, which is 1653. But from there, we do have some highs that leveled out around, call it 1670, just to make it easy. If we get above that, then 1700's right in our mirror, and that will make this 161, which isn't even that far out of the money. The 161 by 164 call spread in gold that expires, I think it's next week or in April. It'll make it a nice trade, and I put this on a couple days ago. I don't know which day it was, and still looking for it to work out. So anyways, this is just a little update. I think the market potentially, bring up 10-minute, we're bouncing off these lows, point of control for the day. You can see overnight we're doing a pretty good job bouncing. You look to see if sellers are there creeping at 1396 or so. And if they are, you'd look to take your sell into them, whether it's buying puts to hedge your longs or taking profits, whatever the case may be. I do think we will test 1400 again after another move down, but at the same time, after this huge move on the S&P or in the markets in general, after this huge move that we've seen, really 1068 up to 1408, what is that, 350 S&P points? Pretty impressive run. Wouldn't be surprised to see the low 1300s again at some point, and that would be a great opportunity to look to get on the market so long as we get a bounce there, even around 13, right around 1340, 1330, anywhere in that range. You see this high volume area, that would be the place to be. But for now, 1370 would be your first target to the downside. So take care, have a good night, talk to you tomorrow.